Greetings, test takers. This is Dean Tenney. I'm coming to you from my studio here in fabulous Las Vegas. One of the favorite or most popular pieces of content on my channel are practice questions. And so today I have 41 more practice questions that are about the series 65 and 66. This will be in addition to the 50 that are already on the channel. And I will link to the other 50 practice questions in the video description, as well as in pinned comments, so you can find those questions as well. These questions come from our collaboration with Test Geek Exam Prep LLC and its managing member, Brian Lee. My channel is a free supplement to your paid study materials, and Exam Geek Test Prep LLC is a paid supplement to your paid study materials. And as part of our collaboration with Test Geek, you get a free look at some of the paid content there. You get a 20% discount on all of the products and services available there. And there is a link to both Brian's channel, Test Geek channel, YouTube channel, as well as a link on the homepage to his website if you want to check out all the goodies he's got available for you. There's nothing over there that costs you if you get the full supplement for either 65 or 66. That includes his hours of videos and his quick notes and practice exams. That's the highest end of the package that you can get from him, and that's $99.95 with our Guru 20. Guru 20 is our 20% discount code. You can get that for as little as $80. Okay, so let's get started on these additional 41 practice questions. Which of the following is not a valuation method for a fixed income security? Which of the following is not for a fixed income security? Well, fixed income securities would be bonds as well as preferred stock. And so we would be looking for something that doesn't have anything to do with a future set of income streams. And so the answer to number one here is D, right? There is nothing in the price to earnings ratio that is about income streams. So which of the following is not a valuation for fixed income? We do use parity and convertibles. We do discounted cash flow. And for stocks that pay dividends, either common or preferred, we do dividend discount models. So a bond analyst determining the value of a debt security by adding together the present value of the future coupons to the present value of the maturity value is using which of the following methods? And so the method we're using here, and that's the definition of discounted cash flow. That's exactly what we're doing. Now, you should have been able to get rid of the dividend. That's kind of a toss out. So a lot of times as a test taker, you want to do what's called process of elimination. Eliminate what you know it can't be the right answer to. So the idea here, the thing that is the trigger for doing this, determine the value, adding the present value of future coupons, that is kind of the trigger that the answer is A. Although discounted cash flow is commonly thought of as applying, I'm trying to keep track of how long we're spending doing these things. So let me set my little timer. Although discounted cash flow is commonly thought of as applying solely to fixed income securities, forms of discounted cash flow used for valuation of stock include. I highly recommend on these NASA exams that anytime they give you an acronym like DCF or USA, whatever the case may be, NASA, that you just spell it out. So every time I see DCF, I'm going to say discounted cash flow. Now, this is kind of in the similar vein of our earlier one. This is kind of in the similar vein of our earlier one. So price to earnings ratio. So all this discounted cash flow. No. Dividend discount model, indeed. Discounted book value, no. Dividend growth model. Yeah, there's two assumptions here. Now, I always use Mr. Buffett. Maybe I'll get a call from his office someday saying, Bean, stop using Mr. Buffett in your examples, in your lectures and your explications. But Mr. Buffett is a big fan of doing the dividend discount model, and he can assume one of two things. For example, he has 1 billion shares of Bank of America stock that he bought for Berkshire Hathaway. And when he's doing that, 700 million shares he bought in a primary transaction. That means the issuer received the proceeds. And 300 million he bought in the secondary market, meaning the previous owner received the money. That's 1 billion shares. And when he's doing his discounted cash flow, he can either assume that the dividend of Bank of America is going to remain constant at 21 cents a quarter, which it is presently. And if he uses that, that's going to give him a lower number than if he says, well, if things go well, maybe Bank of America will raise its dividend. And of course, over the years, Bank of America, since 2008, 2009, 2010, we had a little bit of a glitch. They've been raising that dividend. And the other thing I would know on the test, besides the answer here is D, is that I would know that the dividend growth model will justify a higher valuation. In other words, if Mr. Buffett is assuming the dividend can grow, he can justify paying a higher price for the Bank of America stock than if he assumes that that's a constant. And then the other one I would make sure I'm aware of is on the test is you can't use dividend growth model for a preferred stock, right? Because the preferred stock, the dividend is not growing. A customer is looking to invest in an income stock. They are looking for a 6% return so their children will have enough money to go to college. To determine the best price to pay in order to achieve their goal, what would you do? So a customer looking to invest in an income stock, they're looking for a 6% return so their children will have enough money to go to college. To determine the best price to pay in order to achieve her goal, she would need to determine. It sounds like we need to figure out what they're going to need in terms of a return. And so I think the best choice here is going to be D. I'm not a particular fan of that particular question, but oh well, right? The sale of a policy's owner's existing life insurance policy to a third party. I like this question. You should expect to see something about this. It's lower probability, but it does show up. What I mean by that is some questions have high probability in terms of showing up in your draw, whatever your draw of the exam is. I'm wishing for you a dream draw. Everything you studied shows up. But every once in a while, you get a draw from hell, and you just got to be able to take down any particular draw of the exam they give you. And the answer to this is B by definition. B by definition. Please do not call me and ask me for a PDF of this because I'm not going to give it to you. It's a paid supplement from Brian. But if you actually had this paid supplement from Brian, if you choose to buy this, one thing I like is you might want to consider on things like that I just told you are definitional, or if you have a 4x6 or 3x5 card or notepad while you're watching, one thing you might want to consider is doing what I call a poor man's flashcard. And on definitional questions, what I like to do is just get rid of the wrong answers. I have somebody testing today, and I told her to do this to Brian's exam and just, I'll mark out the wrong answers, and the night before, which is last night, and the morning of, which is this morning, that she just read the questions and the right answers, particularly on those that would be, perhaps aim and shoot, point and click. Mary gets a wedding ring worth $3,000. She gets divorced and she gives it to her sister. So this is a gift. Her sister, Fran, when it's valued at $5,000. Fran sells the ring for $6,000. Now you got to be focused on what Brian is actually asking here. And what he's asking is, what is the capital gain? So Fran is going to assume Mary's cost base. I think you would see this more often as a security question. But the cost base was 3 and she sold it for 6. And so the capital gain is $3,000. High probability, which is a precious metal. The one that I get debrief on is accept format. So, on the test, what people tell me they see is not so much what's a precious metal, but all the following are precious metals except. And I would know that copper is not. It looks like this should be an ABCD. I don't know if I accidentally changed the format. It says 1, 2, 3, 4, and that should be ABCD. I think that's probably me messing around with it. I put this into a Word document so I can make it bigger because I realize some of you may be watching this on a smartphone, so that's on me. So I definitely know copper is not. Another thing I would know is that precious metals would be good inflation hedge. So I'd be prepared for a question that says, why would you add precious metals to a customer's portfolio? And you would say it's an inflation hedge or a purchasing power risk. Those are pretty much the same thing as test answers go. Under the Uniform Securities Act, which is a reason to deny registration? Which of the following is a reason to deny registration? And so here, I think Brian's getting a little too clever for for the test. I think I would have got this to a 50-50 pretty quickly, either A or B. Misdemeanors have to be something securities related, and investigation isn't, something. So either a felony 11 years ago or you had got in trouble with the insurance, with your insurance company, and that would be a red flag in terms of getting involved in the securities industry. Any denial from any other regulatory authority, that's what that means. And join from an insurance company means you had a problem with the Department of Insurance or something like that. So again, not one of my favorite questions, but I like the takeaway for the exam, which is it's a yes answer that's serious if you've been denied, suspended, or revoked for your registration, had any kind of a regulatory problem with some other regulatory authority. An investment advisor is using a cloud to store his client's data and pays a monthly subscription fee. He is moving to a free cloud. Free is susceptible to cyber hackers. Not necessarily. I trust my Google guys more than I trust, anybody else to protect me. I use both Google and the cloud, not for, broker dealer stuff, but my own stuff. And I feel perfectly fine that that's as protected as I can make it in terms of what they allow me to do in terms of authentication. So I don't like A. B, allowable if he did his due diligence research and it has data recovery, backup, and security. Absolutely. Sounds pretty good. I like that. Now, I highly recommend on the test you read all the answers available to you. But I like that one so far. Allowable if he did his due diligence, security cost to the customer, cost to the investment advisor. That's not as good an answer as B, right? Because, it shouldn't be a matter of cost. It's, whether it will do what you need it to do for you, right? Free isn't allowed. That's not true. Free is definitely allowed. If alpha is positive, now what Dean thinks is not testable, but I think of alpha in excess of beta, right? So for example, if I had a stock and the beta was 1.5 and the market got 10%, I would be expecting 15% based on beta. It's 1.5 times as volatile as the market. And so if I got, instead of 15%, I got 20%, I would think of that 5% excess as alpha. So here, the investment has outperformed. I like that. Not underperformed. Positive means we actually did better than the beta. The return was negative. No, the return could be positive. For example, my example, we had a beta 1.5. We expected 15%. We got 20%. But even if we got 5%, we would have underperformed and we would have had negative alpha. So given that answer set, 10 looks to be the best answer. 11, an investment advisor rep. Every time I see this, I would think it's you, right? You're an investment advisor rep. That's the point of taking a 65 or a 66. To become an investment advisor rep. So you store clients' info only on a laptop with no backup files. Wow, that doesn't sound very prudent at all. Info on a laptop. Okay. Yeah, no, I like the B answer. It's not so much that matches that scenario, but every firm has to have written supervisory procedures about cybersecurity, about, all kinds of things. And in fact, in the comment section, tell me if you'd like. I'm thinking about doing a lecture just on written supervisory procedures and all the potential test questions about that. We ask every new hire to read it and sign that they acknowledge it, they read it, they understood it. And in the future, if they say they didn't, we whip that out of their employee file and say, isn't that your signature? Saying they read these things and you understood these things. B, an investment advisor. Now, again, a lot of people struggle. You always want to make sure before you get too deep in a question, where they're asking about a natural person, like number 11, a living, breathing human being, walking planet Earth, 65, 66, or they're asking about a firm, an investment advisor, a broker dealer, an issuer. Those are all unnatural persons. So you want to first look at this, and then you want to say, okay, the next thing I'm going to be interested in, if it's an investment advisor, perhaps is it federally covered or state covered? I have a lecture called Who's Your Daddy? Because basically you're either going to be, as an investment advisory firm, belong to the state or states, or you're belonging to the SEC. So here it's an investment advisor who gives a brochure to a client at the time of the contract. How many days does the customer have to cancel the contract without a penalty? Now, I kind of think of this as a free look period, a free look period that you have. And so here, if you have an investment advisor in a state level, the customer has 5 days to rescind and 48 hours prior to that. So the answer to 12 is C. Now you don't get many aim and shoot point and click questions like that. So again, if you want to, on questions like that we tell you are just aim and shoot. By the way, this is, the state version of this. I don't think that's a big deal, but again, I'm just making a poor man's flashcard is what I'm doing there. According to NASA, the North American Security Administrative Association, which of the following is not considered custody? What is not considered custody? So they're asking here. I think I would have used the Sesame Street trick. One of these things is not like the other. One of these things is not like the other. So according not considered custody, it looks like here my best answer is I'm unable to appropriate client funds. I used to use this as part of my presentation when I was actively involved in the business. I'd say, listen, my investment advisory firm can't steal what we don't touch. I don't have custody. My investment advisory firm does not have custody of your monies and securities. So how would I, steal them if I don't have access to them? I don't have direct possession. I don't have indirect possession. Your monies and securities are at my broker dealer I use for execution and custody. That's where your monies and securities reside. Access the client's bank account to pay advisory fees. Again, I do have the authority when I was a practitioner to deduct my investment advisory fee out of your brokerage account to get paid. So, the point there is I could say my fee is $10,000 instead of $5,000, right? So you do have a little bit of risk there. What determines eligibility for full Social Security coverage? And that would be C, another definitional question. And as a practitioner, we know that this income stream is one we're going to have perhaps available to most of our clients. And then what we're going to try and do is create another income stream for retirement, or maybe 2 or 3 income streams, maybe an income stream from their non-retirement planned assets or distributions, because we're going to need an income stream once they're in retirement. I got to think about the way I used to think about it as a practitioner is we're going to put your money to work for you so that at some point you're not working for your money. And what a big turn on it was to be able to call clients and say, hey, listen, we've successfully executed our investment plan. You now have enough money working for you. You don't need to work for your money any longer. Woohoo, woohoo, right? That's where we're trying to get. BD orally tells all employees about the prohibitions of front running. So front running is trading ahead of customers. It's a big no-no. Which of the following is correct? Which of the following is correct? This is acceptable because the company only has to stop and prevent front running, not establish policies. Absolutely not. We've said over and over and over again that every brokerage firm has to have everything within its written supervisory procedures. So this is not acceptable because you're supposed to have written supervisory procedures about how you're going to prevent this from happening. Your client is expecting the S&P to decline in value over the next 3 months. If this occurs, how can your client profit? Now, this is always a challenge to decide how much time you want to devote to something that perhaps is not already something you intellectually own from previous tests or whatever. 65, 66. I've been thinking about putting a little futures lecture in there. 2, 3, 4, I don't know. So, you have to decide this. So I would be hoping that you could look at selling a put and know that that's an obligation to buy the security, or in this case, an obligation to let somebody put the index to you, if it's an index option. But ultimately, that's bullish. And here it says we think it's going to go down. So we're actually bearish on the S&P. Buying a call option. I would hope that at some point you can read that and say that's a choice to buy. So both A and B are bullish. Now in futures, if you buy the futures, you think things are going up. And if you sell the futures, you hope they're going down, right? Because you're going to sell the futures at, X and then buy them back at a lower price. You're hoping to sell the futures contract high and buy back the futures contract low. Do me a favor in the comment box. If you want, I've been thinking about this. If you want a lecture on futures, a little, I don't know, maybe 10, 15 minutes, I can do that. I've been contemplating it for a while. I just don't want people to go down some rabbit hole on futures, but maybe I can make an intro to a Series 3 class and use it that way as a teaser for Series 3 folks. Anyways, the answer 16 is C. Maybe I like Brian's answer set here. Maybe you just focus on the answer sets instead of trying to learn options or stuff. By the way, just before we move on, one other point. On your exam, if there's a stock position, you're either going to, for protection, buy the option contract, or for income, sell. So I was just working with somebody yesterday, and I was telling them that's a 50-50 in terms of any option question you encounter where they say there's a stock position. So 17, your client recently found out their son will need lifelong extensive medical care the rest of their life. The mother doesn't work. The father's the only income. As their advisor, what should you recommend? Yeah, it sounds like an H health savings account. Sometimes that shows up, and sometimes it doesn't. But when it's a possibility, you're going to encounter that. And the health savings account is to, again, offset medical expenses and high deductible medical plans. So 18, an 85-year-old client just suffered a stroke and is unconscious in a hospital. Which of the following gives instructions on what to do if the client is on life support? Yeah, a living trust would incorporate the language that's going to be in there, in terms of that. The rest of the stuff is not have anything to do with this kind of a scenario. 19. An 80-year-old invested $25,000 in a high-tech mutual fund. He has $110,000 net worth, including equity in his home. The mutual fund, is now worth $21,000. As the investment advisor rep, which would you recommend? Which of them would you recommend? Invest in a more conservative fund within the same fund family. That sounds like we're going to say, admit this was a bad idea. 80-year-old, man, that's also a red flag. I'm just going back reading the question again. I'm looking for clues on this thing because I'm kind of, when you get a suitability question, sometimes you want to roll back into the question and say, okay, what are the particulars here that I need to answer this question? By the way, sometimes reading the answer set helps. Invest in a fund with a contingent deferred sales charge? Absolutely not. Absolutely not. Invest in variable universal life? Absolutely not. Keep the money invested so as not to incur a tax issue? No. I think I would have used on this one process of elimination to arrive at the answer 19 being A. An investor does not take into consideration whether a stock is undervalued or overvalued. An investor that does not take into consideration whether a stock is overvalued or overvalued would be described as, well, that's certainly not going to be active investing, because that's certainly what we do, right? In active investing, we're trying to, sell overvalued stocks, either sell them if we own them or short them and buy undervalued stocks, right? So that's not true. Aggressive, no, under aggressive, we actually try and do that. Contraina, it sounds like, given that answer set, looks like index is going to be the appropriate choice. Now, indexing, you're going to get at least one or two questions where the indexing or index fund is going to be the appropriate answer on your exam. The other one that shows up is when they give you somebody who believes in the strong form of the efficient market hypothesis, then we would recommend an index fund. 21, which of the following would most likely be a definition of a person soliciting orders for security sales or purchases? Gee, that sounds like an agent of a broker dealer to me. That sounds like somebody who has a 6 or a 7. Right? Boom. Remember, soliciting, key point, broker dealers get paid for transactions. Broker dealers get paid for transactions, either commissions or markups or markdowns. Investment advisors do not get paid for transactions. They get paid for assets under management. They pay for get paid for the relationship. So, when you're talking about transactions, you're talking about a broker dealer. And then when you're talking about a broker dealer, you're talking about either somebody who has a 6 or a 7. If all you're taking is just your 65, well, then maybe you're just a fee-based investment advisor. There's people taking 65 who have a 663, 65. And there's some people who just take a 65 because they work for a fee-based investment advisor. 22. Which one is true about the death benefit on a variable universal life policy? Another good one to aim and shoot, point and click. that I would make a flashcard of if you're a flashcard person, or, if you're going to use a lazy man, a poor man's flashcard, we said the way you do a lazy man's or flashcard. And again, I'm just telling you, don't call me and ask me to send you this PDF. If you're interested in this, call Brian Lee, managing member, Test Geek Exam Prep LLC, and say you just watched the explication of the additional questions, and you would like a copy of that as a PDF. I don't know. My guess is he'll probably charge you $20. If you buy the better value, by the way, is just to get the supplement. So, but whatever. My channel is a free supplement. So that means, you get to watch stuff, but we don't have the capability of sending you stuff. If you don't get that on the community playlist page, I have a little introduction to the relationship of my channel to Test Geek Exam Prep LLC. All right, 23. Which statement is true concerning deferred compensation plan? Deferred comp. So I don't need the money now, and so I invest it. And this is typical of employers for their high-end employees. We can't discriminate. We can't discriminate like on the 401k. Everybody's one 401k is the same. But deferred comp, we can't actually discriminate because it's not a qualified plan. It's not qualified under ERISA guidelines or the IRS. We're typically using after-tax money, and so we can do that. The client and the manager have met and agreed on selecting a portfolio that has preset time intervals to allocate the portfolio to move from one asset class to another. I like this. This is a good question I think Brian has here. This would include pharmaceuticals, food, automobiles, manufacturing. This could be this would be called 24, a balanced portfolio allocation, right? We're rebalancing the portfolio based on our predetermined plan. How long is a BD required to store email communications? I like this question because what Brian's getting at in this question is regulators make no distinction between, written communications written on dead trees, snail mail, or electronic communications. The standard for communications is the same. So there's no distinction between email or written communications. An agent is required to file an application for registration. According to 17A4, which is not required. Now, again, they give you context here. And one thing that's not required for an application for registration is your educational background. On your U4, we do ask you your employment history for 10 years. On your U4, we do ask you for your residential history, and we do ask you for any aliases you may have used. So by process of elimination, that's it. Now, if you're just a 65 fee-based, you're going to probably use a U10, but the vast majority of you watching this will be using what's called a U4 to make this registration. Who is compensated on behalf of assisting the issuer in the offering and sale of a new issue? Now, that sounds like a particular participant. This underwriter is typically a broker-dealer, but underwriter is a better answer than broker-dealer. Some broker-dealers do underwritings and some do not. That's the underwriter, but you want to make sure you have an underwriter because there's no worse sin than making a fraudulent distribution of securities to the public. That's just a huge thing. So you better hire an underwriter, make sure we do it right. This is called the primary market, right? Issuer receiving the proceeds. 10, which has the most impact? 28, which has the most impact on yield? Low interest rates, high interest rates remaining the same. Yeah, price, right? If price goes down, yield goes up, price goes up, yield goes down. That inverse relationship. So any yield calculation we're doing is dependent on the price. Which of the following is least important to a bondholder? Well, I used to tell my clients, what Dean tells his clients is not on the test, but I used to tell my clients, listen, when we buy a bond, we're just going to hold it to maturity. And so we're going to be immune from fluctuating interest rates. Now you're going to get your statement every quarter, but the bond going down in value is kind of if you sell it. I mean, if we don't sell it, then it doesn't matter. So we're just going to buy bonds in the secondary market. We're going to hold them to maturity, and then we're immune from fluctuating interest rates. And a lot of people who buy bonds do just that, right? People who buy bonds are typically where they're at financially. So we're certainly going to be worried about credit. We're certainly going to be worried about credit risk, and credit risk goes with default risk. And absolutely, we're going to be concerned with that. We're going to be concerned with reinvestment risk. Every 6 months, we're getting our money and we have to reinvest it. We may not be able to reinvest it at that rate. So liquidity, being able to get in and out of the bond is not going to be a concern for us. Well, I like what he said, least important, because the idea here is we're not day trading bonds in our customer's portfolio. We're going to own the bonds for the income stream they provide, and we may or may not hold them to maturity, but in this list of things we're concerned about, this is the least important. 30, in a fixed annuity, the payment can be described as in a fixed annuity. Now, fixed annuities are a non-securities product. That's insurance. The insurance company takes the money you give them, they put it in their general account, and they make investments, and they hope to make more than they promised you. But at the end of the day, in a fixed annuity, the insurance company is assuming the investment risk. And so what you're getting paid is not a repayment of your principal, not a repayment. No, that would be if you bought a bond, not guaranteed. Now, B, if the economy is just turning upwards, which of the following is most likely to outperform? So what Brian is asking you here is, what of these is most likely to participate in the business cycle in a good way? So just turning, which is the most likely? Brian is more than happy to take questions from you, but I could actually overthink this. Given this answer, so this is just Dean. I'm tempted between A and B because there's going to be, if the economy is rising, people are going to use more energy. But I think the technology is the best answer given the answers. That's not one of my favorite Brian questions, but oh well. From which article would you expect to find the safe harbor rules? This word is important not only for this particular question, but that's a thing you're going to encounter. That's a legal term. So whether it's ERISA or, exempt transactions or exempt issuers, those are all what we call in legalese safe harbors. I always use the example of my brother. My brother is involved in hemp. He's got to be careful because there are certain situations in which that's going to get him into trouble. And so my brother says to an attorney, what are the safe harbors for guys like me involved in cannabis or hemp? And, we better make sure you stay within the safe harbors, right? Because then you're not in trouble. So get comfortable with that language, safe harbor. So one safe harbor, for example, under exempt transactions is unsolicited. So a lot of people on debrief tell me they encounter the word safe harbor and they struggle a little bit about what that means. That's just a legal term for things you do and stay out of trouble. For example, one safe harbor under ERISA is to give your employees at least 3 investment choices in their retirement plan. So that's what that's about. Anyways, here Brian has it just as a name and shoot point and click question recognition, which is A. 33, your client has received proceeds from a retirement account as a result of a QDRO. Make sure you know a qualified domestic relations order. You are definitely going to see this. This is very high probability. And what this is a order from a judge to the pension plan to distribute X number of dollars to the former spouse. And so the answer here is B. So as long as that former spouse takes the proceeds, we're at 30 minutes. So, you can at 30 minutes take a break if you want. I'm going to finish this up. So usually what I do is I pop up the screen and take a little break and tell you to take a break. But there's 41 questions here. So I'm just going to continue to proceed here. But make sure you know what that QDRO is. That's very high risk. I can't imagine you're not going to see something about that on your exam. That's a qualified domestic relations order. Qualified meaning, you are not going to pay the penalty. Your customer has mentioned to you their investment advisor rep, that's you. They're concerned with the high cost of medical care and is interested in perhaps starting a health savings account. You inform your customer they would only be eligible if. Yeah, they're just matching that. You are probably going to see at least one question about a health savings account that does show up routinely, and it's pretty much like how Brian has the aim and shoot point and click. 35, your customer can invest either $100 in either investment in the chart below. Which is true? So we do our math. A lot of times you don't have to do the math on the test. But you look at investment 1, we do the math and we say that the future income streams are worth today 130 and we can get it for 100. We look at investment 2 and we say the future income streams are worth 80 and we would have to pay 100 for it. Based on that scenario, it looks like the best deal here is to free lunch in this one, right? We're going to pay $100 for future value 130 in terms of the calculation. What we did is we took the future income streams and we came up with they're worth 130, and we can get it for 100. So that's the better deal. That's the better deal. 36, an investment advisor rep learns a customer's granddaughter will move to a new state. The grandmother would like to transfer the 529 to a new state. Make sure you know the difference between 529s and Coverdales. You know, that's part of the explication is riffing on that. That's not what this question is. I'm just warning you to make sure in your list of things to make sure you can do that you're familiar with that. The answer here is A, by definition. And again, that would be a good flashcard for you. You know, however you get taken care of that. 36 is A. 37, once a testamentary trust is created, who is responsible for the taxes? I just had somebody yesterday, run into this. So the trust is going to be responsible for the taxes. Now, there are some situations in different types of trusts where the grantor would be responsible for the income taxes on the income received. So just make sure you know how the various trusts get taxed. It's a question. If you tell me you missed a mark because of trust, I'm going to say, maybe 2, 3 max on trusts. 38. Which of the following would be defined as an access person? Very testable. High probability. So make sure you know what an access person is, right? And then the point is they're going to have to disclose their holdings. So put that on your things that you must own because that's very high probability. 39. When is an investment advisor required to submit an audited balance sheet? An audited balance sheet. When the A has custody, yep. Discussion of the client funds, perhaps. What investment regard? There we go. Boom. That one's even better. So, I'm looking for the best potential set there. And then 39, my best potential set is 1 and 3. 1 and 3. With regards to setting up client accounts, an investment advisor should take into account the Patriot Act. Absolutely. The Patriot Act, it means picture ID. You can prove who you are, that you claim to be. And then the rest flows from that. FinCEN, there's no such thing as FinCEN authorization. FinCEN is about where we send CTRs to, SARs to, and I have a nice little video on the channel for you on anti-money laundering, red flags, and that is part of these things go together, but all this stuff kind of flows from that. The answer to 40 is A, the Patriot Act, and that requires a picture ID and then the process for closing your account if we can't verify who you are. All right, our last one. 41, which of the following best describes a broker-dealer? So remember, broker-dealers get paid by transactions, either trading as a dealer principal and charging markups or markdowns, or acting as a broker agent on behalf of customers and getting commissions. That is what a broker-dealer is. And so, D sounds like the classical definition of a broker-dealer. And then remember what flows from that is, does the broker-dealer have to be registered? Absolutely, with the SEC, with FINRA, and at least one state because they have a home office, and then any state in which they have a place of business or any state in which they have a retail customer. Okay, so I hope you found these additional practice questions helpful. Smash that like button for me. If you found this was added value, I'll put this in the playlist. That'll bring the playlist on 65 to over 300 questions and the playlist to 66 to over 300 questions. So we're always adding questions as we go. Show Test Geek Exam Prep LLC some love. Check out their website, the links on the channel. And I'll see you in a future. Put in lecture requests if you like. We got a lot of stuff on 65, 66. So I'll probably be circling back over the next several weeks and be adding more content to the SIE, the 6, the 63, and some principal exams. But, depending on your testing, if there's something else you'd like to see on 65, 66, let me know.